Okay, so one of the things I wanted to address was the way they're gonna tax based on the poverty line. So let's create a theoretical poverty line of about $27 a year. So if they're gonna tax 20% of it, that would leave them at 54, or 5,000, they would take away whatever, $5,400, whatever. But since they're at the poverty line, they would give it back, right? So they would still be making $27 a year, or $27,000 a year. However, they said that they wouldn't tax or implement the tax until six grand above the poverty line. So let's say 33K. So that would leave them take them away at about $6,840, right? Well, if you take it away, that's still about $27 or $27,000 a year. And the one at the poverty line is working for $13 an hour, and the one six grand above the poverty line is working at $16 an hour. So based on this, theoretical scenario, I don't see how that's fair if, one's making more than the other, but they're still, end up with the same amount of money at the end of the year. Then moving on, that the tax system wouldn't generate enough revenue. So according to Dina Waddell and Helene A. Burton, with a flat tax, states would not be able to produce the tax revenue at the same level that the country currently needs or that the system currently provides. These plans, a lot of the flat tax rates, whether it be this one or the Forbes plan or the Holland or Lushka plan, are both extremely simplistic, but to reach the same level of tax revenue that we currently are making right now, the tax rate would have to be much higher or allowances much lower. And finally, and also, flat tax reduces government revenue that helps support government-run programs. So one consideration of the flat tax is the disrupt development of limiting deductions such as credits and exclusions that benefit the middle class as well as the rich, that play an important roles in our lives. Pension contributions, employers provided health care, and deductions for mortgage interest, property taxes, and charitable contributions that support everything from soup kitchens to education to the arts. So with these flat taxes, it would take away all these, benefits, that help support, these government-run programs. Also, a flat tax may not be as efficient as previously thought or claimed by the opponent. So according to David A. Weisbeck, similarly, the flat tax is thought to reduce the distortions of current law created by incentives to reduce structured transactions to avoid tax, but these incentives would remain still. For example, the flat tax will create incentives to structure service relationships as independent contract relationships, or to pay wages in form of returns to capital, or to create offshore subsidiaries, and so on. One can expect the flat tax to create significant adverse incentives on business. The efficiency claims of the flat tax, therefore, are substantially weaker than previously thought. And finally, flat tax would cause inequity among taxpayers. According to John A. Tassilo, Chief Executive of the National Association of Realtors, limiting tax deductions would create a horizontal inequity because individuals base long-term commitments on existing law. Taxpayers who made tax-preferred investments under the old rules would experience an abrupt decline in their current after-tax income and wealth. Which is why, brings me to the last point, that the transition from the current system to the flat tax system would be too complicated. So even if the consumption tax is the right system for an economy starting out from scratch, it may not be the right way for a way to reform an existing system. The main transition issue in taxation of the old capital assets accumulated earlier out of the after-tax income, whose principal would not have been taxed again under the income tax. So although these transitional treatment of the old capital is typically thought to be likely, not having a transition that is implicitly taking the old capital gain under a consumption tax is arguably consistent with the three main goals of the tax reform: efficiency, equity, and simplicity.